We work a lot with public institutions and especially the startup units within public institutions like La French Tech. In the UK, you have Tech Nation. You have all over the world, you see governments that are becoming way more aware that they really need to catch on to innovation and entrepreneurship, kind of following the Silicon Valley model. And we help them with that through data. And the reason this is kind of special for us is it's not only more than a third of our revenue base, but these government partnerships also help us with creating a whole different business model. So we work with over 100 governments around the world.
Welcome to Finscale, the show that takes you to the heart of finance transformation. Every week, Selene Niederkorn and her guests explore new initiatives shaping the future of the industry. Enjoy the show.
Hello, everyone. Hi, Yoram.
Hi, Selene.
Thank you for joining Finscale.
Pleasure. Good to talk.
As I told you, I had you on my list since 5 years, so I'm super happy to have you as guest. You're one of the best people in Europe, I would say, to read and see what's really happening in tech beyond the noise, I would say. And today I'd like us to dive into the real state of the tech ecosystem over the past 18 to 24 months. I believe people need a bit of clarity and see who's winning, who's lagging, and how fundraising dynamics are shifting across stages and regions. But I'm also interested by Dealroom. You are the founder of Dealroom. You created a wonderful company already 10 years ago. And I would like to understand Dealroom itself, how your data is built, your methodology, and what's behind the scale-up.
Okay.
To start, can you tell us a bit more about your background and what led you to launch Dealroom?
Okay. Yeah, so I'm from Amsterdam. I studied economics also here in Amsterdam. As a student, I really got into reading Warren Buffett's letters to his shareholders. That got me into corporate finance because I initially went into economics to learn about kind of poverty and kind of more on the macro side, but I kind of got drawn into corporate finance, so like almost the complete opposite in a way. And at some point, I got intrigued also, therefore, by investment banking. Like this is back in 2003. But the way I kind of got into investment banking is kind of funny because I was way too late to get accepted. And they weren't really hiring that many people. But I eventually just cold called some of the banks, like directly, which they were never used. No one had ever done that because you always go to... you're supposed to go to join the clubs and this is the way you get in. I didn't do any of that. And I got myself an internship at Lehman Brothers. So I worked there for about 4 or 5 years until their bankruptcy in 2007. So kind of the global financial crisis. One of my colleagues at Lehman started their own M&A boutique. So that's how I put one foot into the entrepreneurship world, and we were just the two of us helping startups with exiting their business. This was very fun, and we really helped some founders with this kind of transformational event for them, life-changing event. So it was pretty rewarding work, but also very hard work because you had to start every deal, every mandate, you had to start all over again. So that's how the Dealroom idea kind of came about. I wanted to simplify my own work, create like the ultimate database where we could match any startup with all the buyers out there. That idea evolved a bit, but I started Dealroom in 2013, so it's now 12 years ago.
Already, yes.
And Dealroom, as the name suggests, it started kind of as a deal-making platform, like a two-sided marketplace. That was the original idea. I was inspired by AngelList at the time, but we kind of evolved from that to being a data provider. So initially, to kind of get the marketplace going, I started collecting data, and people got interested actually more in the data that I was collecting than in the two-sided marketplace. Mm-hmm. And so, now 12 years later, we're one of the scale-ups from Amsterdam, about 100 people, and with clients all over the world.
And what kind of clients do you have?
Yeah, so we have three types of clients. Venture capital firms are one of them, and of course they become more and more data driven, and they have now even whole teams to kind of build some kind of data warehouse and use data to make sure that they don't miss any deals. So most of the top tier VC firms in Europe use our API or our platform or our research. Number two segment for us is big tech companies like Google and Amazon and Stripe. And they are also always on the lookout for startups. They want to discover startups to offer their services, and they often want to be first. But they also often want to understand just trends, like their M&A teams, their corporate development teams want to understand trends. So that's the number two. But I saved kind of the best for last. So our third segment, which is kind of our secret sauce, or not so secret, I guess. I think what makes us unique is that we work a lot with public institutions, and especially the startup units within public institutions, like La French Tech. In the UK, you have Tech Nation. You have all over the world, you see governments that are becoming way more aware that they really need to catch on to innovation and entrepreneurship, kind of following the Silicon Valley model. And we help them with that through data. And the reason this is kind of special for us is it's not only more than a third of our revenue base, but these government partnerships also help us with creating a whole different business model. So we work with over 100 governments around the world because they are our main customer in each ecosystem. Mm-hmm. They can also help us to make the platform actually widely accessible to the broader ecosystem.
I wouldn't have imagined that the third category was the biggest one for you.
Yeah. Now it's not the majority, but it is the biggest one. Mm-hmm. Yeah. So they help us make our data better, but they also introduce us to key players in every ecosystem. Our access model is also a lot more open than it would otherwise be, because they are kind of a pillar in underneath our business.
And how did you, in the beginning, manage to gather data? How did you verify data? Because data on private markets is very complex to get access to. So how did it evolve over the time?
Yeah, we started completely manual because my background isn't technical. I literally started in the very, very early days just with a bunch of people that I hired, and we just did everything manually. But the nice thing so you're right that it is very hard to collect, but people in our market are looking for quality and not quantity, is what I discovered early on. Ideally, they want both, but if you're small and you do something really, really well, there's still a demand for it. So that's how you can kind of win when you're really small. And then as you grow, you can, of course, you try to grow also the quantity while maintaining that quality. I would say a few years into building Dealroom, we got more and more tech savvy, and I was able to also hire, engineers who could automate a lot of the work. But we've always kept a big human element to how we collect data. But today, we kind of collect data in three ways. So one, we aggregate public information that's on the web, news, So we convert news into data. There's a lot of sources out there that are actually public, also social media. Anything that's findable on the internet, we try to aggregate it and structure it. Then number two, we have a large research team. It's about a third of our team does either research or data curation. And they also deep dive into sectors, so deep tech or defense. I'm sure we'll talk about it later. Climate tech, AI. We have people who are specialized in kind of covering these, a bit like an equity analyst in an investment bank, but we do it then for like the private and early stage market. The third and last source of data for us is our community, which consists of these governments that I told you about earlier, but also VCs and universities, students, startup founders. They all submit data to us and contribute content that we verify. And that's really a kind of our edge. For example, a few weeks ago, we released a massive report on European spinouts, and we collected a ton of data from universities. And they wanted also to help because nobody had ever comprehensively mapped the spinout universe in Europe.
I've not seen it. I'll read it.
Yeah.
And how do you think your methodology differs from other, because there are many other platforms existing and which were already existing when you launched Dealroom. So how do you think that your methodology differs, and what would be the impact for the users, be it investors, governments, or even entrepreneurs?
I would say two things. It used our main differentiator used to be that we just did Europe really well, and all our competitors were from the US, so that already helped us a little bit. But today that's not anymore enough. So we are also global now, and I would say even the competitors from the US pay attention more to Europe, so they try to do a better job. Today our differentiators are two things. Number one is the research. So we put just a lot more emphasis on deep diving into verticals and to themes like spin-out data. I think maybe the university spin-out thing is just a good example where we have dedicated resources to it to really understand this topic really, really well and capture all the nuances. But also by doing that, we create credibility with the universities themselves so that they are willing to partner with us and send data our way, which we can then enhance, also give back to them. So it's really a win-win for them as well. So that's, again, this community aspect. So I would say doing research where it's not just about collecting data, but also about really understanding trends is one. And partnering with key players and try to build a community is number two.
Great. Amazing. I'm really impressed. Yoram, I told you that I would also be interested by discovering and having a look at the data over the last 18 to 24 months regarding the evolution of the European tech ecosystem beyond the noise that we hear. We hear about slowdown, recovery. So could you, according to what you have published in your research, can you summarize what are the big trends to keep in mind?
Yeah. So, I mean, the one of the things that surprises even me is that you see all these big amounts being invested, especially in the large AI companies. If you add all this up, and you can debate whether it's actually still venture capital or not, but if you just include it, we're still not at the levels of investment that we saw in kind of 2021. That actually amazes me, especially if you consider how much is being invested. So at the peak in 2021 globally, there was in one quarter we saw 190 billion of venture capital invested. There were kind of 4 or 5 consecutive quarters where more than 150 billion was invested in a single quarter. In the last few quarters, we haven't reached much more than 120 billion, which is still like historically quite a lot. But if you look over an entire year, in 2021, it was almost 700 billion invested globally. And this year will end up at around 400 billion.
Okay.
However, 400 billion is more than it was last year. Last year, it was around 340 billion, and the year before that, 316. So there is, again, an increase in investment, but it's maybe not as dramatic as you would think if you look at the numbers. And those big numbers are really driven by, to a large extent, by AI and these massive rounds that are going to a handful of AI companies.
And rather in the US or also in Europe?
Very much in the US. We do not see that level of activity in Europe at all. So that also means that Europe's share of VC investment is actually going down quite a bit this year. It had been increasing for the last 10 years. But because we do not have those mega rounds, like those multi-billion mega rounds, that Europe's share of VC invested is actually decreasing again versus the US. But it's actually not so much. I'd always try to remind others, but also myself, that it's not US versus Europe. It's really, kind of the Bay Area versus the rest of the world.
Mm-hmm.
So that is one trend. And if I would just zoom in on Europe, this year there will be about 60 billion invested in European startups.
Mm-hmm.
It used to be at the peak 2021, 2022, it was about 100 billion.
Okay.
For the last 3 years, so 2023, 24, and 25, it's been around 55, 60 billion a year, roughly flat.
Okay.
So that doesn't sound very positive, but I think there's nothing bad about those numbers per se. It's still 60 billion, which is way more than it was, say, 10 years ago. Mm-hmm. There is a very vibrant venture capital ecosystem now in Europe that you just didn't have 10 years ago.
Of course.
But it just has been going through these crazy fluctuations. And we don't have those massive amounts of capital that you see in the US.
Do you include the UK in your figures?
In those figures, I included the UK, yeah.
And did you see a difference country by country? So a massive shift, I don't know, in the UK than continental Europe, or it's more or less the same split?
Yeah, I was looking at it. So the UK is actually having a pretty good year this year. Mm-hmm. I saw that they are growing about 30% this year. France has been growing 9% this year. I'm talking about VC investment. Mm-hmm. Germany is down 11%, which maybe if we were talking about GDP, that would be massive. In VC, which is so volatile, minus 11% is not a dramatic change. It's basically kind of flat. China is a lot lower still this year. But so the UK is actually doing pretty well in terms of investment. However, something I shared this morning is how much money is being raised by the VCs. So not by startups, but by VCs. Mm-hmm. And we saw that the UK is actually having a pretty bad year in that sense.
And why is that?
Yeah, you could say it's because like last year you had Atomico, you had Index Ventures, you had, I think, maybe Boulderton. There were a couple of funds that raised really large funds, and so they wouldn't be raising again this year. That's how it works. Mm-hmm. So that's an explanation, but it still looks like pretty dramatic. Yeah, it does feel like maybe still it's like an after effect of Brexit, where European fund of funds maybe feel a little bit more hesitant to invest in a UK fund. And at the same time, we see that fundraising by French VCs is having a record year this year.
Mm. Okay, interesting.
Yeah, that is pretty interesting. And yeah, but fundraising is difficult. It's not as easy maybe as it was 3 years ago. Like the climate has changed. Interest rates are higher. I think some people have also been burned in the asset class over the last few years. Okay. But on the other hand, there is also a lot of excitement about the ecosystem.
And what about the late stage? Because what you mentioned seems to be more on the early stage investment. What about growth funds?
What I mentioned was really across the board. I don't know if I would. So you could look at it early stage versus late stage. The dynamic is a bit similar between those, but what you do see is that the bigger funds are more able to raise. So the money is more going to kind of the bigger brands, whereas like
no risk.
Less risk. And kind of new names are having a tougher time to raise, which are then often also smaller funds. Whereas the big names nowadays usually try to do multi-stage.
Clearly, yes. And about valuation, do you have figures that you can share with us about valuations and what they say about companies' state? Is it a normalization?
Yeah. So I shared something a while back. So I think this is interesting that in the US, multiples, so entry multiples, have been going up a lot this year and are at the same level or even higher than they were in 2021. So in the kind of peak COVID era, which really speaks to the kind of excitement that there is over there in AI. And you see the same level of excitement on the surface in Europe, but it's not showing yet in kind of the multiples, which I think, so entry multiples are in Europe are still actually have always been significantly lower in Europe. But that difference is now like 2x almost, whereas normally it was maybe 20-30% discount. So yeah, we sound excited by AI and we are, but it's actually not that much showing in the aggregate numbers.
And in terms of sectors, so you mentioned artificial intelligence, of course. We all know that.
Yep.
Are there some other hot sectors or cold sectors? I'm thinking of fintech because I really love fintech. I'm passionate about fintech. And of course, we have seen those ecosystem reducing a lot those last 2 years. So can you, also here, share with us a bit of insight about these vertical allocation?
Yeah. So fintech indeed has been having a comeback lately. So let's say 5 years ago or something, fintech was super hot. Then people found out, actually a lot of these businesses are not profitable. They're often making tiny margins, like a small commission on transactions. And then if you then deduct all these expenses, they can never make a profit. I mean, but those were actually more like anecdotes than that it was actually data. And now we're suddenly seeing a Revolut, obviously. It's one of the most valuable private companies in the world. There's also a bunch of payment companies. Then there is also stable coins. There's actually now also, again, a lot of innovation happening in fintech. So there is a resurgence. But yeah, Robinhood is having success with tokenization.
Yes, of course.
You hear I think Larry Fink is making statements now. There is this stable coins that also Stripe is now going into. So
it's a natural evolution, but rather from the big players than the emergence of many new players. It's so difficult. I mean, it's so difficult to navigate in that ecosystem and mixing blockchain technology with all the constraints you have, and particularly in Europe, linked with the MiCA regulation, makes that very few entrepreneurs manage to build sustainable companies in that realm. That's my opinion.
Yeah. So I think that makes sense. That some large institutions are slowly starting to embrace parts of it, especially kind of maybe the back office part, kind of financial infrastructure, where there is a role. And actually the way we manage money is very analog in a sense, and blockchain could have a role in somehow making that more digital and seamless. So there is some excitement coming back, but I think you see also just very old, or let's say fintech companies that have actually nothing to do with blockchain that are also having a comeback in terms of like expense management, and companies that are just executing it really well. And maybe the market is now just more ready for it than it was 5 or 10 years ago. But if I would really say, okay, what's top of outside of AI, what's really hot, it is defense tech.
Yes.
And deep tech.
Yeah, unfortunately, yes.
Yes. Yeah. So about a third of VC investment now goes into deep tech, which is like really massive. It used maybe 10, 15 years ago, deep tech was seen as something really fringe. And there was a lot of skepticism about it. It's like these moonshot ideas that would never work. But I think people have come to realize more and more like, hey, some of these things actually do work. And if they do work, the company that succeeds, that has a breakthrough, has almost no competition and can get really big. And it is, after all, a power law business where you're looking for those outliers, and that's what deep tech really is. So it's so there's a deep tech focus now for many VCs. A lot of them have hired partners specifically to focus on this. So it's now a third of VC. And a third of all deep tech is now kind of what you call DSR, so defense, security, and resilience. So it's not just defense, but also things kind of adjacent to it that can play a role in the overall resilience of Europe. That is like a really big theme now.
If we go back to Dealroom now, can you explain to us how you embraced artificial intelligence, how you got prepared, what kind of engineers you recruited to make your system evolve and broaden the range of services for your clients?
The funny thing about AI is that this is now available through an API. And so actually the biggest challenge is not to hire AI talent per se, but to have your existing software be able to work with AI. So for us, the challenge has been actually to make our existing infrastructure ready for AI. But we're very excited by it. For us, the biggest change so far has been kind of on the development side. So all our developers use AI coding tools, and it's been like a total game changer there. And we have also been able to actually bring in people into the development team who weren't coders, but can now also work on the project on the inside. On the app itself. So from the user side, the biggest improvements on the Dealroom side are actually still going to come, and they're coming next year.
Oh, wow.
In the first quarter. So we're very excited by this, but I can't.
You cannot say. So if you're thinking about your vision, Dealroom, in 5 years, where will you be?
Yeah. So today we work with 100 cities and regions around the world, of which 60 are in Europe and 40 outside Europe. In the US, in the Middle East, in Asia, also in Oceania, we see a very rapid growth of public institutions that want to plug into our system to measure their ecosystem and benchmark it with every other city around the world. We want to be the leading global player in this. This is really kind of our market that we kind of created. And hopefully within 3 years, and at least within 5 years, every major city in the world hopefully uses our system. So they're all using the same data layer, intelligence layer, and that makes the data also very comparable. If we achieve that, we can also make a lot of the Dealroom platform available to builders. So startup founders, people who work at startups, and to really make Dealroom data the kind of the shared language that everybody speaks when it's around anything to do with their startup ecosystem's performance.
Good luck. Yoram, we have an audience of entrepreneurs, not only entrepreneurs, but many of them are listening to us. So can you provide a few advice? What would you say is the recipe of your success in 2 or 3 words?
Never give up.
Good one.
For me, it feels weird to speak about recipe of success. I don't feel like we were there yet.
You've done great so far.
Well, thank you. I was recently learning about Hannibal, the kind of warrior and general from the Phoenicians, and this kind of stories you hear, you learn people who go through so much, not even setbacks, but moments that you think like now they have been defeated and they are completely destroyed and they will never come back from this. But then they come back. And I think in the end, Hannibal didn't quite, in the end, he did get defeated, but that's also part of life. But it made me really realize that's life. You have to enjoy that. And I think that's the fun of being an entrepreneur. And so, I would really advise never give up. And you have to kind of, just like when you're also having children, these things are so hard, but they are also, you don't want to live any other way. And that's kind of how it is.
I understand. I have 4 kids, so I can only understand. Okay, great. Thank you so much, Yoram. My last final word is always a book recommendation or a podcast recommendation. So what would you like to recommend today?
Okay. I'll recommend Odd Lots, the podcast. I like how they go into very big topics, but asks to kind of the stupid, simple questions.
There are no stupid questions. Okay, Yoram, thank you so much. And I wish you the best for your company and for the future.
Thank you so much. All right.
Bye.
Thank you for listening to Finscale. Don't hesitate to subscribe to the newsletter on Substack to stay up to date with the latest innovations. You can also find the podcast in audio format on all listening platforms and in video format on YouTube. See you soon with Solène Niederkorn.